What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, I'm here with the living legend, ThetaWarrior. We're so happy to have him. So, ThetaWarrior, why don't you say hello to everybody and welcome them to the stream?
Well, hello, this is ThetaWarrior. Happy to be here. I know this has been a long time coming, so I'm happy to sit down and discuss some charts with you.
So, guys, like my heart is literally beating so fast right now because I'm like just as happy as you guys are to have Theta here. So let me go ahead and, as we always do, let me retweet this. Make sure we got everybody on here. And guys, why don't you let us know where you're tuning in from tonight? I'll throw a few names up on the screen and then we'll rock and roll. Live now, come for fun with Theta. All right, let's run this. Okay, boom. So here we go. So who do we have in the building today? So we have Eduardo from Mexico. Welcome, brother. Long-haired dude from Chicago. Mike from Miami. Chutron from Rhode Island. Brent from Louisville. Lorani from Florida. Daniel from San Diego. Masood from Virginia. Holy, we got a lot of people in here today. Sintrade from New York, and I'm going to do one more, and then we're going to get into the meat and potatoes. All right, guys? So here we go. Last one. Zaza from Detroit. All right. So there we go, guys. Thank you so much for being here. I know we're already at 200 people, which is great. All right. So, guys, ThetaWarrior, check him out here, ThetaWarriorPro.com. Everything he does is here. I'm going to give him the floor a little bit later to discuss a little bit more. But, you know, ThetaWarrior, the reason I brought him here, guys, is because, to be honest, he is probably one of the most, I would say, consistent and honest and nice people that you would ever meet in this industry. He, from day one, I asked him a lot of questions, even back in the day, and he always responded to me. And I'm sure you guys are familiar with Theta. He does not miss commenting and answering questions. So wait, we got a donation already right off the bat. So we got Gurgavin Chandoki. I went all in AMC at 65. What should I do? I'm the wrong guy to ask, brother. I don't really trade that, but welcome to the stream. I appreciate you here. All right, guys. So first, before I get into this, right now, hit me with a 1 if you guys know what I'm talking about Theta. Have you asked him questions? Have you commented on stuff? Let me know. Do you guys feel the same way? Hit me with a 1 if you've had that positive experience with Theta, and let's show him the love and support that we have out here for what he does. All right, boom, boom. All right, I see all the ones coming in. All right, so I'm going to start off with a few questions, guys. The agenda's right here, and I'm going to let ThetaWarrior take it away. So first and foremost, brother, how did you get into trading, and kind of what started your journey, and how long have you been doing this?
So I've always had an interest in the markets. I always found them fascinating. My dad was involved in the world of finance, so he got me interested at a pretty young age. And I pretty much just started out, very basic, just buy and hold strategy. I bought some blue chip stocks like Apple and Microsoft. And I just learned about, how the market fluctuates and how it moves. And then once I had an understanding of that, I started reading a little bit more about options and learning about how to trade the derivative side of it, and basically just how to use leverage on your side. So once I found that world, I was instantly hooked. I knew it was what I wanted to do, and I instantly had a love for it and seemed to be a knack for it. So I've just kind of been running with that ever since I discovered it.
Awesome. So buy and hold, I guess a lot of people, especially on my channel, we kind of start off with that because it seems the most logical way to, make use of your capital. Is that something you still employ to today? Do you kind of spread your money out in different accounts for different purposes?
Yeah. Oh, absolutely. I have multiple portfolios. Some of them are just, the buy and hold strategy where I own stocks and I add to them on dips. And then I have other portfolios where it's just strictly for trading options. I also have portfolios where I just sell premium. So yeah, I employ a number of different strategies. For me, it really helps to separate them into different portfolios, so my mind can be geared towards, okay, this is just for buying calls or buying puts or whatever the situation may be. So that's something that I was able to do and kind of help me focus more on my goals, basically.
Yeah, and that's something that I tell everyone that follows me as well, is diversification is the name of the game. And sometimes day trading is going to be doing a lot better than buy and hold, and then sometimes buy and hold seems to be doing a lot better. But at the end of the day, if you spread your money out and diversify yourself with different strategies and different accounts, it gives you an edge, because when one of them are not working, the other one may. So I really like that idea, and I think that's something important that everyone should do. The more you're able to diversify, the less concentrated risk that you have on yourself.
Absolutely.
All right, so thank you for that. And most people here on my stream, they know about you. They really want to get into some of the nuts and bolts of everything. So let's talk a little bit about trigger trading. So I know a lot of, trigger trading is a really popular way of trading. It's probably one of the most simplest ways. Break above X level, go long, break below X level, go short. I wanted to talk to you a little bit about, how did you come about learning about trigger trading? And what's your approach to doing it? How do you come up with the names that you want to play? Because I know there's so much in the market. Do you use a scanner? Do you have specific criteria?
So basically, over the years, I've kind of built a watch list that I like to trade. It's mostly made up of tech names because they have normally good liquidity, as well as them being volatile, which are the two things that I look for. The trigger trading really just came about when I learned about support and resistance. I mean, the two most basic fundamentals of the market. And I realized that, if you have a resistance level at $100 and the stock crosses it, there's, the chance that it's going to run to the next resistance level. So that's kind of where I started to figure out, okay, I need to find these levels. I need to figure out, what's my target? Is it going to be 105, 106, whatever the next resistance level may be? And then figure out how I want to capitalize on that move. So, until it gets over that $100 level, I really have no interest in the stock. So it prevents me from having to watch a million things all at once. I can pretty much just set an alert. And then when it gets hit, that's when I know I have to pay attention and look to enter a position.
Got it. And I know a lot of people are going to ask this. So when you're taking those triggers, you have your alert. Are you just taking it as soon as it breaks the price? Or are you waiting for a confirmation through a candlestick? What's your approach to that? Are you automating it in any way, or are you actually watching it live and then making a decision?
That's a great question. And you're right. Just because you have a trigger level at $100 doesn't mean you immediately buy as soon as it crosses that mark. There's a lot of extenuating circumstances that you have to be aware of. Honestly, if price is able to consolidate just below that level and then push through, that's usually a better indicator to me that it's going to be an entry, versus if it runs, $5, you got 10 green candles in a row, and then it crosses, it's highly likely that it's going to pull back in that situation. So the path that price takes to push through a target, a trigger, is very important. I do watch everything. I mean, I have a ton of monitors. I'm watching a lot of different charts. Pretty much I automate things with the alerts. OCO orders are really good. I believe you use those, right?
Yes, brother. Yep.
Yeah. So those can be great if you can nail them down and get them exactly the way that you want them to be. There's definitely a lot of fine tuning in it. But mostly, for the most part, I want to watch it because of that reason that I just spoke about. If price moves through a trigger in a hurry, maybe I want to wait. Maybe I want to see if it, is able to consolidate just above that level before I get in. So there is, somewhat of a human element that I leave up to it.
Wow. Well, you just blew my mind right there, because that was definitely dropping some gems. So I see the dropping gems in the chat. So guys, hit me with a 3 right now if your mind is blown, because that is very, very impressive. And I just wrote that down here. The path before the breakout and, looking for consolidation below the price, the target or the trigger, is actually something that I didn't really think about. Normally, because I like to keep everything automated, I just take the trigger as it comes, just for automation purposes, so I don't really have to watch anything. But man, I would say that what I can think about right off the top of my head is, if you get that consolidation right before, you also have a great place to put your stop loss, because you have that shelf right there. And if it fails, you're out.
100% correct.
Beautiful, brother. So we got some donations. Let me just put them up here before I miss them. I've never had more than 500 people. I've never had more than 300 people live, and we're at 513. So I knew we were going to break the internet. So man, this is awesome, guys. Thanks so much. So let me just throw some donations out here. Thanks, Rich and Theta, for bringing trading education to us. Been printing profits consistently since I found TradingView and added Strat FTFC with Jonathan with the 5. Appreciate that, brother. And then we got Jonathan again down here. Do you pick certain theta or delta levels on your option strikes? If so, and how, would you mind sharing them? So yeah, so let's talk about that since we're here. So do you look, so I guess when you're taking the trigger, are you looking for, you know, the next strike up above, or how are you going with picking the strikes?
So it's going to depend on the expiry that I go with, but 9 times out of 10, I go with about a 45, or I'd say 40 to 50 delta, which is basically at the money or right, you know, the next strike out of the money. And the reason is because you're starting off with a round of 50 delta, and that's going to be great. You know, if everything goes well and it goes in the money, that delta is just going to get higher and higher and higher. And the other reason is because of the theta. Theta as well is going to be the highest right at the strike that's at the money. So if things go your way, you know, price starts to go deeper and deeper in the money. That means that theta is going to get lower and lower and lower. Even though, yes, as you get closer to expiry, it's going to increase. Just the way that the options work, theta is always going to be higher at the money. So if you can get away from that, get deeper and deeper in the money, you're going to have that kick in delta. The theta is going to be coming down lower. And, you know, that's when magic can happen.
Well, that's why we call you Theta Warrior, brother. That's amazing knowledge you're dropping. I really appreciate that. So on to that topic now, I guess a little bit of an underrated topic, I would say, is about the position sizing and the risk management part of the game. So when I know you use stop losses. That's something I actually asked you a long time ago. Yes. So how do you come in with the position size? There's also something that I read on your channel, I think it was a few months ago, that really, really blew my mind about, you know, if you have a 50% stop loss on, let's say, these contracts and you size accordingly, the risk to reward actually becomes, you know, exponentially better with that stop, because you're kind of making double or triple your money and only risking about 50% of it. So why don't you talk us through that? How do you deal with position sizing? Is it like a flat percentage of your account that you put in, or do you start off with a small amount, then add as the trade gets better? What are your thoughts on that?
So risk management is the first job of any trader. If you don't have risk management, you can blow yourself up, and then you have no portfolio to trade. So that comes first. When it comes to position sizing, I will base that on my conviction level, honestly. If I'm like, you know, 99% sure I'm going to get a move, everything's lining up, the technicals are there, the flow is there, everything looks right, you know, I'll take a decent sized position. I'll put a good chunk of my portfolio in it. The stop loss that I prefer is a tight one. And what you just said is exactly why. The easy example is, let's say you have $2,000 that you're willing to risk. If you do not use a stop loss, that means you can buy $2,000 worth of options and your risk is them going to zero. Now, on the other hand, if you want to use a 20% stop loss, you could buy $10,000 worth of contracts. So both scenarios are going to have the same amount of risk, $2,000. But if you're right and the move does happen, in the scenario where you did not use a stop loss, you only have $2,000 of contracts, right? The scenario where you did use a stop loss, you have 10 grand worth. So obviously that position is going to much more highly benefit from the move occurring, and both have the same exact risk. So the way that you can achieve that, and by using a tight stop loss, is to be really precise with your timing. You know, you want to buy dips to support, you want to sell bounces to resistance. You know, you want to get it as close to that level as humanly possible. And that is what allows you to use a tight stop loss.
Wow, that's amazing. And I guess one of the things that I do, I guess, you know, my style is a little bit different because I try to automate things and just leave them. Either hits a stop or the target. When it comes to shares, I always have stops. But when it comes to options, I usually accept the full 100% risk. And I'm kind of like, I'm mostly doing them on a swing trade level with those 100% risk. And I'm saying, you know, there's always that hope that you get a move, you get a big move on, let's say, the weekly or the monthly chart. And then there's also that thing in the back of your head that says, well, what if there's some news in a positive light? Because you're already positioned in such a way that you know your risk, your downside is whatever you put in. But your upside in theory is just infinite with these options. And I think that's something that I love the most about them. And especially with shares, I've learned that if you're holding them and, you gap down, let's say, you can gap below your stop. And all of a sudden you could be losing a lot more than you wanted. But with options, the worst thing that can happen is it can go to zero.
Right. And I know traders like yourself that are very successful and do not use a stop loss. It's all about, personal preference and risk management. In your scenario where you only put $2,000 to work, I do the same, but with the 20% stop loss, we're both going to risk the same amount of money. The thing with the way that I do it, with the strategy I employ, is that I'm not afraid to get back in if I get stopped out, which it does happen. Like I was trading Micron last week. I got in too early. I bought some calls. I got stopped out. Then I realized, the price keeps falling. Then I'm thinking, okay, well, now it's really at the support level that I should have bought it at. So then, boom, I get back in. And, I was lucky enough. I made back the money I lost and then some. So just because you get stopped out of a position doesn't mean you're wrong. Usually it just means that your timing was off. And as you know, with options, timing is everything.
Yes.
So you really do have to be more precise with the timing if you're going to use a tighter stop loss.
And that's something I was actually talking about the other day, and I called it the V trigger. You trigger, you break, it comes back down, and then it immediately triggers again. And sometimes what needs to happen is the shorts kind of need to get, or whichever trigger you're going, the other side kind of needs to try it once. And then once they fail, you really get the next move. So I really like that, because at the end of the day, it's the same setup. You're doing the same setup. It's not like you're doing something different. And having those tight stops can really help you to, to take advantage of the exponential gains that options have. And that's something that I'm going to be working on a lot. And I really, really appreciate that bit of knowledge.
Yeah, absolutely.
So now let's talk a little bit about, I'm going to get to the flow. I know everybody here loves the flow, but I want to talk to you about two things. So shares. Do you trade? Do you trade shares first of all, or are you mostly options? Do you do a combination of both?
Well, to be honest, I'm mostly an options trader just because I don't think you can beat the leverage. If the stock is cheap enough, shares sometimes make sense because you don't have to worry about theta or expiries or anything like that. Back when SPACs were like the hot thing, trading the warrants was pretty profitable because they would fly, like the Lucid warrants and all that good stuff, the Fisker. So when that was going on, yeah, I traded a lot more shares, warrants. But right now, pretty much, I'd mostly just stick to options. I mean, it's hard to trade 1,000 shares of Amazon, right? But it's not that hard to trade 10 contracts of Amazon. So that's why I mostly stick to options now.
Yeah, and I totally agree. And even SPY, I remember, a few years ago when I was trading SPY, it was like $200, and now it's at like 400. So it makes it harder. And one of the things that I tell traders is futures contracts. Like the micro futures are is $5, and you can get away with a small account. I guess what advice do you have for traders with small accounts? Is it kind of just looking for the names that are cheaper to play the contracts on? How would you suggest a new trader or a rookie trader that might not have a lot of capital to get started in this game?
Well, I think that there's a trade and a position for any size portfolio. There's a lot of different ways to make trades cheaper. One of them is by doing a vertical, when you might buy the 100 call but sell the 105 call, and then that can greatly reduce your cost. There are also stocks that are obviously going to be cheaper contracts, like AMD is a lot cheaper to trade than Amazon is. So, I think that, finding the right ticker to trade, finding the right strategy to trade it with, that can be key. And also, just keep your positions small, trade 1-2 contracts, until you're comfortable, until you start getting some momentum. You should never have your whole portfolio at risk because, like we said earlier, if you blow yourself up, you have no money, you have nothing to trade, then you're back to saving money. So you always want to protect your portfolio at all costs. But, if you have $1,000, $5,000, that's plenty to start trading with, I think.
Awesome. Yeah, I totally agree. It just comes down to just percentages in my head. I'm always trying to lose no more than 2% of my capital on a trade. My capital could be $1 million, it could be 1,000, could be whatever, but the percentages keep me sane. And do you take a lot of, I guess, more swing trades overnight, or are all of your trades pretty much triggering and getting out within the same day?
Good question. So this past week, I think 90% of my trades were day trades, just because I didn't trust the market environment and I didn't really want to hold anything overnight. There were a couple exceptions, like Datadog got some really nice flow. We'll talk about that later on, but something like that, they went out to like November. So, I'm okay holding a November contract overnight because the theta is not going to kill you. But this market's been so up and down and all over the place that pretty much I've just been scalping, 30, 50, 60 cents here and there, wherever I can get, until the market, is going to stabilize and actually pick a direction. But, truthfully, I don't have a preference. I love to day trade. I love to swing trade. I think that they both have, a place in your portfolio. I think that you got to play to your strengths. Not everyone's going to be a day trader. A lot of people are going to do better if they, buy a contract 30, 60, 90 days out, in a bull market and an uptrend, and, just sit back and just let it make them money. So I think that, every trader has to find their own, strategy and do that, play to their own strengths.
Exactly. That is very important. Let me throw up this donation here from Dev with the $10. Very new and know nothing about options. So what I learned here is what I'm starting with. What do you use for resistance levels? What program or app? Where do I begin? So, brother, I'll say that I have, 230 videos here on YouTube. I have a beginner's series. You can definitely check that out. Theta, what do you recommend for new traders, like completely new? Did you start with certain books or, any specific resources that you would recommend?
Yes, I read a lot of books, and I watched a lot of YouTube videos. And actually, if anyone wants to go to my website, I have a great book list. If you hover over services and then go down to education, so I've written up a few different things, positioning checklist, some different strategies, understanding the Greeks, that's really key. But all the way on the very bottom is going to be a book list, and it's all linked to Amazon. The very first one on the top of the book list was, I think, one of the first books I started reading, Getting Started in Technical Analysis. It's super basic. It covers all the fundamentals. It shows you the graphs. It teaches you the moving averages. That is, still proudly displayed on my bookshelf. Great book. All those are wonderful. But if you're looking for a beginner book, Getting Started in Technical Analysis by Jack Schwager is a great one.
Wow. I mean, guys, look at this material right here. Like, look how insane this is, guys. There's, Theta doesn't have to do this. Most of us in the community don't have to put stuff like this out. I mean, but going out of your way and doing things like this just shows the type of guy that Theta is. Like, this is the part that I was talking about a little bit earlier, guys. Why use a stop loss? About, maximizing your capital. So guys, make sure you check this out. Let me put the link in right now in the chat. Check this out. Check the website out. And also right now, hit me with a 7 if you're getting good value out of this discussion. Hit me with a 7. I want to see the 7s coming in. Yeah, and look, this is the perfect segue right here to what I want to talk about next. So we have this positioning checklist. I've never seen this before. It looks amazing, and I know we're starting to talk a little bit about flow. So why don't we get into that? I know a lot of the people on my channel love flow. They're interested. How do you combine flow with technical analysis? You don't have to go into too much detail, but if you could just give us a basic overview.
Of course. So basically, I started out just being purely technical analysis. I studied it in and out, and I understood how it worked, and I was just fascinated and blown away by it. And I still use it, to this day. I realized, though, that there was a whole nother aspect of the options market, and that is the world of flow. And it's basically, big players putting big money to work. And the beauty of, the technological age that we live in is that we have access to all of that data. So I use a platform called Black Box Stocks, and it shows me all of the flow. And basically, I can say, okay, I'm bullish on Tesla, and I'm looking at, buying this call position and this time horizon. But I want to confirm with the flow and make sure that it's all lining up. So if I see a bunch of, traders also making similar bets, they're buying calls, putting a couple $1 million to work or what have you, then that gives me even more conviction in my trade. So that would be like I'm getting into a full size position. Now, if they're being bearish, and they're, buying puts or they're writing calls or whatever the situation may be, then that's going to give me pause. And I'm going to think, okay, well, what's going on here that I'm not seeing? And the main reason is because these guys have a lot of money and they're not messing around. Every day in the options market, there's hundreds of millions of dollars that are traded. And also they have access to better information than us. Who knows, they may know someone, or they've heard something, or, some information was leaked or whatever. You'll see it come up on the options market. These guys place bets according to that information. So, I may not know the reason behind a trade, but I can still see that trade. And that's enough for me. So combining technical analysis and flow was like a game changer to my trading. I mean, it like night and day difference when I was able to line everything up and make sure that, the strategy was consistent.
Yes. And I will say, guys, just what you were touching on it doesn't matter how good your technical analysis is. Nothing is 100% in trading. You might have the perfect double bottom and it might not work. That's just the nature of the game. And every strategy, at best could probably be, 60 to 70% at its peak. And it's going to have drawdowns as well, where you go on a losing streak. And I think combining different tools like the technical analysis with the flow gives you even more confluence and even more of an edge. And I think that's very, very important for traders, is to have a basis, but also adding different things to give them an edge. And I think that's very, very important. And the flow, like you said it very elegantly. It's another tool showing us things that we didn't have access to 30, 40 years ago. And if, like you said, giving you an extra conviction, or maybe making you double guess or double check your thesis to your trade, is very, very important over time, because you're going to be doing, let's say 200 or 300 trades a year. And that, when made over a course of that much trades, can definitely have an impact in your trading.
Absolutely. You're 100% correct.
Beautiful, beautiful. All right. So I know people are going to ask this. I know this happens to me also. So let's say you're taking a trigger, it breaks, and then it flips around. And for me, I call that the false breakout. I use fibs to help me measure that. Why don't we step into a chart actually, so we can show this as an example. Let me just go to SPY here, see if I can find an example here. But I just wanted to maybe get your thoughts on how you deal with things like that. So actually, here's a good example. So this was SPY on Friday, and we had that breakdown and then this like V bottom here. So if I go to the daily chart, this was the Thursday bar. So I'm just going to take a fib here. I love using the fibs. I want your thoughts on those after as well. But let me go ahead and mark this chart up real quick. So 436.77 is the high, and the low is 428.78. And then I'm going to go down to the 5, and then I'm going to show an example here, guys. So right here is, let's say you're taking, the short here. So the trigger of that low, you could see right here that we do push down, but we come pretty much right up against this 0.169 extension, and that's pretty much it. We get a whole bunch of outside bars at the bottom. We actually get a triple outside bar, which is a very, very rare pattern. I don't think I've seen this on a 5-minute before. And then from there, we just went straight back up. So I guess in your case here, how do you deal with these false breakouts with these triggers? Is it just a matter of having that tight stop loss? And do you get your stop loss to break even at some point to alleviate some of the risk on the trade?
Yes, absolutely. As the trade is working and moving in my favor, I will continually push a stop. Generally, once I get up about 20%, I move it to break even. I get up 50%, I move it up to 25% in the profit zone. Because like you said, price can reverse at any time. We hope that it's going to keep going in our favor, but a lot of the time that doesn't happen. Is that Friday right there that we're looking at?
This is Friday. Yeah, this is Friday.
I think I actually shorted that break right there, and should have got long when it reversed there. But yeah, kind of like what you were touching on right there. When it does reverse and reclaims that level that your arrow is pointing to, that's definitely the time to get out and or flip long. A good trader doesn't have a bias, doesn't care if price goes up or down. All we care about is that we catch the move. So, you know, a false breakout can be a great, or false breakout or breakdown can be a great indication of a reversal, which is exactly what we just saw on Friday right there.
Beautiful. So let me go to the 15 so we can see this a little bit easier. But I guess one of the things I use to help me measure these false breakouts here is I just have these fibs just to show the projection of the previous day's range. So in this case, this is 16.9% of that previous range. I see that you have fibs on your charts from time to time. Do you really incorporate them a lot, or are they kind of like an extra confirmation to what you're already doing?
So I think there's a lot of different ways to use fibs, and fibs are 100% real, and they do work. Mostly I use them on daily and weekly charts to figure out where, you know, a stock may retrace or where the extension may be. I tend to not use them on the lower time frames. I know it works very well for you. Like I said already, every trader is going to be different. But the Fibonacci is an amazing thing. I mean, it's found in nature all over the world. You know, it's the golden ratio, right? And the fact that it comes up in the stock market and that price actually respects those levels is, you know, mind blowing. But we could talk about that for an hour on another discussion.
Yeah, I know. That's that'll take us into the rabbit hole, brother. Because
exactly.
Once you start seeing fibs on the chart, you start seeing fibs on the road. You start seeing fibs in your dreams. They are definitely a very powerful thing. So actually, we got another donation here from our brother Vic Patel with the 5. Guys, if you guys have learned or made money using knowledge provided, please support Rich, help him build a school one brick at a time. Thank you, brother. I really appreciate that. So I think you know about this data, but you know, one of the things that I'm trying to do in the future is build a school, you know, for the youth, underprivileged kids, and trying to teach them some stuff about financial education, financial literacy at a young age. Because I found that when I went through school and all that, you know, I was learning about discounted cash flow, derivative of this, and you know, I didn't learn anything about the markets. I didn't learn anything about charting. I didn't learn anything about money management until I went into the field. So I that's kind of, you know, what my initiative is there.
I think that's awesome. I mean, you're a lot like myself. You like to give back. You want to help people. I mean, huge kudos to what you do, Rich. I mean, I see the effort you put in and the work you do, and you know, you're helping people make money, and you know, you're spreading the education and the love of the market. And I mean, I think it's awesome. You got a great following, and I love what you do, man.
Thank you, brother. And I'm gonna tell you guys, me and Theta, man, we love this. I know for 100% sure that we love this, because to put out this much content, guys, to educate, to answer questions, to do all of this, you have to love this. You have to live it in order to be at the highest level. And luckily, we're blessed to have this opportunity where we can wake up, come to the markets every day with a chance to change our lives, a chance to get better, a chance to learn. It's also a reflection in the mirror. It shows you your worst habits. Are you greedy? Do you lack discipline? Do you lack focus? You know, the market reflects to you exactly who you are. And that's something to me that I've learned to grow, and I respect and love the market. And I love traders like yourself, Theta, that, you know, like I can just sit here and listen to you forever and learn. And I know you're not bullshitting, because every single question that I ask you, you have an answer for since day one. And I know we're all really, really grateful to have you here. And guys, why don't you hit us with a 9 real quick if you're enjoying this stream? And I'm going to go into the last few topics here, and then we're going to start chart requests.
That's awesome, man. I love what you just said. I think what you said about reflection is 100% spot on as well. I mean, before you master the trade, you have to master yourself. You know, I didn't come up with that quote, but I've always really identified with it. You know, you need to overcome whatever, you know, emotional difficulties you're having in your life in order to be a successful trader. You know, you have to approach it and just look at it as numbers and tickers and letters and, you know, price. And I think that is what can help you, you know, detach from, you know, some of the fear and greed that naturally everyone is going to feel. So if you can do that, overcome that in your own self, then you can make it.
100%. And why don't we spend a little time on that? And I guess being a trader for so long, and, you know, having the big gains and also, you know, the losers that come along with that, how do you deal with that from a psychological perspective? What are some tips that you have for mindset? And new traders ask me this all the time. And from my perspective, it's, you know, I trade like a casino. I trade every setup that I can that fits my plan, that I can risk, 2% of my capital on. I take them because I know I don't have a favoritism in this game. Sometimes there's stocks that will do things that I've never seen before and make me money that I didn't expect. So I try to detach and just trade it like a business. And if everything I have a coin toss on, I'm more than happy to risk a few percentage of my account because I know the odds are in my favor if I win. And I guess one thing I always tell traders here is if you take 100 trades and you have a 2-to-1 risk to reward, you just need to hit that 34 out of 100 times to walk away with a profit. And 34% win rate is definitely achievable if you're, protecting your capital and doing what you need to do. But I guess from your end, what tips do you have for traders that are dealing with, FOMO and greed and other, mental part of the game?
So, FOMO and greed are two things that, are just going to come from an emotional response. And, part of being a trader is, being able to overcome that or ignore it. It's not like you can train yourself to not feel emotions. You just have to train yourself to deal with them. Every trader has losses. I take losses. Anyone who doesn't tell you that they don't take a loss is lying.
Yes.
So the fact that you're taking losses in your own trading is perfectly normal and natural. You're never going to be able to avoid that. The way that you can make it better or make it less severe is by limiting your downside with a stop loss or proper position sizing. And when you do get stopped out, when you are wrong, you don't want to beat yourself up about it. Everyone makes mistakes. Everyone gets things wrong. You could have the most perfect bullish setup, and then some news will come out and the stock will tank. There's nothing that you could have done about that or known about it. So there's no sense in beating yourself up about it. Whenever you close a trade, you want to learn what you can from it and put it behind you. The last thing you want to do is bring any baggage from a previous trade into your new trade. And that goes for if you win or if you lose. Like, let's say you lose a bunch of money and you want to make it all back in one big bet. You go in too big and then, boom, you're down double. Or maybe you made a lot of money on your last trade and, the same thing can happen. Oh, this is easy. I want to, take a huge bet on this next trade. And then you blow yourself up doing that. So It can work both ways. It's a double-edged sword. You really just have to approach each trade as a new situation, a new trade, and just use that past knowledge that you've learned from your previous trades to, better deal with, this new situation that you're being presented with.
Yeah, and that's hitting the nail right on the head. Every trade is different because, there's different factors that are happening. There's news. There's, back in the day, there was, let's say the China trade war, and then there's COVID, and there's always something. So every environment is constantly changing. And because of that, you really have to be, you can't expect what worked in the past is always going to work today. You have to be very agile and willing to adapt. And like you said, just whatever happened before you got to put that to rest and come with a positive, open mind to the next trade. And I guess hitting on that. So how do you deal with, I guess, when you're having, let's say, news in the market? I know a lot of people are very, very scared of when certain things like that happen. And I guess one thing that I say is just cut your size in half. Generally, that's what I would do. But how do you deal with that uncertainty? And especially in markets like this, where we have breakouts, they fail, we have gap downs overnight. How do you deal with all that uncertainty in the market?
Yeah, I mean, like you said, cutting the position in half, or even just not trading. I mean, you don't have to always have a position. You don't have to trade every single day. Generally, when there's like a Fed meeting coming out, I'll drastically reduce my size, or even just wait. I don't even need to take a trade. In those few hours that are leading up to the announcement. A news event that's not foreseen, they call that like a black swan event that you didn't have any awareness of. There's nothing you can do to predict that. I mean, you could get any type of news, about some war or something, and that could completely ruin your position. So that's hard to defend against. But news that you do know is coming up, like an earnings report, I don't like to hold trades through earnings. Fed numbers and things like that. I don't like to, hold trades that are going to be affected by what they could say. Personally, I'd rather just wait it out and see what the news is. And really what's more important than the news itself is the reaction that the market takes to it. There could be, what appears to be bearish news and the market goes up. That's a pretty bullish indicator, that the market was able to digest that news and they still wanted to buy, that can be a big deal. So watching the market's reaction to the news, I think, is honestly more important than the news itself.
Yes, because even on earnings, I remember we took a swing trade in the swing room together on AMD, and it was a few months ago, and the earnings was good, and the market opened, we hit a few targets, and then we're just thinking this thing is going to go to the moon, and because the overall market itself, like the Qs weren't doing so well, all of a sudden this thing just turned around and dropped and gave back its earnings gap. And that's something that new traders struggle with. It's like, how is that even possible? And that's the thing about the stock market. Anything is possible at any given time. And
Yep.
You got to be ready for it. You got to predict it. And you got to make sure that whatever you put in, you got to be willing to lose it, because there's a chance that you can. And if you don't have stop loss, if you don't have protection, it can get really, really dangerous out there. And I know Theta and myself, for me, I say generally expect 50 to 100% loss with that contracts that you buy. So size accordingly. And for you, you have those tight stops, and I know you honor them. And you're not removing your stop loss because you're getting FOMO and you want to sit in it, or doubling down, tripling down until the point where the trade makes no more sense. So I guess over time, as you mature and you trade longer and longer, you kind of learn those lessons. And I guess sometimes you have to actually learn them the hard way. And I know I have, by losing money and trading on Fed days. I've done that many times. So then finally it clicks when you start losing money that, hey, maybe I shouldn't be doing this.
Yeah, you're 100% right. It definitely does come with experience. And unfortunately, the markets, the way that they teach you lessons is by taking your money. And, it can be a good thing, though, if you use it right, because, the pain that you experience when you lose money can be a good teacher. And it can remind you the next time you're in that situation, hey, remember what happened last time? We lost some money, so I probably shouldn't do that again. So it can be a good teacher. Nothing's free in this market. And, yeah, I think that, if you do use the proper risk management and position sizing, you can do very well.
Thank you, brother. So I know you have to leave. You said in for about an hour. So we're at 43 minutes. And again, I really want to thank you. I'm going to do an open floor right now. I'm going to throw your website up on here. I'm going to go to your channel also. I know you recently launched the Elite ThetaWarrior membership and all. So why don't you go ahead and let us know what you have on your website here, where people can reach you at. What does your service kind of include? Because I know there's a lot of people that would love to, and I would definitely say, guys, ThetaWarrior right here. I know the plan is only $50 a month, I believe, for the Elite sign up, guys. Like, that's a steal. I mean, just listening to the knowledge and the bombs that ThetaWarrior just dropped there, guys, I could tell you from just talking to him that he knows what he's talking about. And I've seen him make calls and trades over the time he's been on Twitter. And I think, guys, definitely worth to sign up and check him out. So I guess, why don't you go ahead, brother, and share with us what you have and what you do.
Well, thank you so much. That was awesome intro. And yeah, so I launched the Elite actually just about a month ago, and I'm just thrilled with how it's going so far. I'm very bullish, and I think we got a great group of traders in the room. And basically what I offer is a lot more in-depth analysis behind what I look at, what I look for. I alert all my own entries. So if you did want to follow along, that you're free to do that. What I encourage people to do, though, is to take the information that I provide and to make it their own, and to make their own trading decisions based off of that. I like to buy a call when I'm bullish and I'm expecting a big move. Maybe you prefer to sell a put. We both have the same directional bias, but there's going to be a lot of different ways to trade it. So what I do is I cover different strategies, like verticals and butterflies and things like that I've learned over the years. And, like I said, you can make your own decisions on, if you want to take that trade that same way or change it up. That's up to you. And actually just today, if you hover your mouse over services, you'll see that Elite member access right there. So I just launched that today, and it's only available to Elite subscribers. And that is where I'm going to be uploading videos that, go over everything, how to buy and sell a call and a put, how to put in a stop loss, how to find a falling wedge on the chart, what to look for in the flow. So really, really going to be trying to drop a lot of knowledge in that. So with the with the Elite service, you'll have access to the private Twitter, this page right here. I'm also launching a Discord next week. I got all kinds of cool stuff planned.
Yeah.
And my goal is to just help, people become better traders, and, make some money along the way with everyone else, in our trades. So far it's been going great.
Yeah. And let's not forget about these products over here, brother. I know you have your shop. So I got the money bag, and I've been filling it up with a lot of money since then. So guys, Theta has some awesome merch, and I definitely want to say that the bag, I've been traveling with it from, North Florida to South Florida, and it's really good. My wife uses it, and all of the stuff here is awesome. So you got your merch there. Another thing that I found interesting was the, I think it was your computers. So this is pretty cool, guys. I've been, I got a laptop, but I would want to, I mean, this thing looks so amazing. I feel like I'll be a better trader just by having this. By looking at this, it'll give me that motivation. But so do you build computers and you ship them out to people? Is that how it works?
Yes, that's correct. I built my own computer a number of years ago, and then I had some other trader friends ask me, SPAC Guru being one of them, if I could build them one. So I ended up doing that and really just enjoyed it. I like building computers, and so hence why I offer them on my site. Basically, I build them for the price listed, and then we just work out the shipping, and then boom, I ship it right to your door.
And that's amazing, man. You're a multi-talented person for sure, man. You're doing everything out here, building computers. You got the gear, you got the service, and I really like what you just said about the that access there for the members, and walking them through the different, the different things you do, the education behind it. That's very important too, because another part of the battle is actually executing the order, putting it into the broker. That's not an easy thing, especially for new traders. So, man, I just want to say again, we are all grateful for having you here, brother. It's definitely helped all of us, just with the knowledge, with the bombs, with the gems, with the price management, with all of that, and your website. I know you're just going to continue to add to it more and more and more with all the knowledge. So I want to again thank you so much for your time. Thank you for being here, and we really, really appreciate you, brother.
Well, I cannot thank you enough. I mean, you've been a supporter from day one since, we first crossed paths on FinTwit, and I love what you do. And I've been reading some of these comments and just smiling to myself here in this stream. You obviously got a great following, and, I want to thank everyone for coming out and showing their support. And, I hope that it was helpful and useful, and that, we can all walk away a better and more knowledgeable trader after this.
Yeah, that's what it's all about at the end of the day. We're trying to help each other as a community. Too many times in the community, everybody thinks that in order to succeed, you have to make someone else fail. And that's not the truth. That's maybe what the world wants you to think. But if we work together, guys, we can succeed. If we put in the work, if we help each other, if we share our gifts and our knowledge with each other, I'm confident that this world will be a better place. So it's a mindset shift that we need to have. And guys, like, I bring all the best streamers, the best traders that I can find in the community. I bring them here for you guys to listen to, because I want us all to get better at the end of the day. And what we're going to do now is, I know if you got to run, that's totally perfectly fine. I'm going to jump into the chart requests. I don't know if you have time for a few, or if not, that's totally fine, brother.
Yeah, we can do a few. I got to hop off in 10 minutes just because I got to do the watch list and everything for next week. But yeah, we can do a few.
Beautiful. All right, let's throw up this donation here from E. Two of FinTwit's finest. The knowledge they share is so valuable. Support them both. Thank you, brother. Appreciate that so much, man. I definitely appreciate all of the donations today, guys. You guys are awesome. So let's go to Twitter. So I posted this a little bit earlier for some chart requests. Let's see what we got. Boom. All right, so I'm just gonna pick a few randomly. CRM, let's start off with that one. So I guess my way of looking through charts, actually CRM is on my watch list. It's actually setting up one of those, I call it the Nirvana pattern, which is an inside-outside bar. And if I draw a fib right here from the low to the high, you could definitely see we're on some Fibonacci support right there with the 50 and the 618. So my style of looking at charts is, if I don't have a specific precondition, like that I like to call it, one of my patterns, I don't trade it because I know that I have an edge when I trade my patterns. And if I don't find something, I'll move on. So I guess, what is your general approach when you're looking at charts, and how do you narrow it down to a list that you focus on for the week?
Great question. So I like to find consolidations because I'm a breakout trader. So, price will consolidate and get tight, like that Bollinger Band that you're showing. When those bands come together, that's just a price compression. So from compression comes expansion. So when I find, something that looks like it's about to make a move, that's when I start to think about, well, what type of position am I going to take here? What's the time horizon? How can I best capitalize on that move?
Beautiful. And I know one thing that you've coined, I think it's the B break and retest.
BRB. Yeah.
BRB.
I didn't actually come up with that, but it is a great strategy. BRB stands for breakout, retest, bounce, or be right back. Either way, implying that, price will break out of a consolidation, come back for the retest. That's when you load up, and then, you get the bounce, and it, continues up higher. So it's a great strategy, and I've seen it work a number of times.
And I'm seeing it right here on CRM. Right here on this daily chart, like I guess right here, you can see these Bollinger Bands getting tight. You see this consolidation. We have the break. We even have the retest. And we also have a Nirvana pattern on the retest as well. So, I mean, I guess that would be like an A+ setup right there.
Yeah.
Consolidation, break, retest, pattern comes in to give you a confirmation. And that's beautiful. And I guess specifically for CRM is actually one of the picks I'm looking at for tomorrow. I really like this pattern here. Generally, I guess if we look in the past here, this blue highlight is the Nirvana pattern. So you could see the last time we had one, we had a good push. And let me just see if I can find another one. It's kind of a rare pattern, but we had one over here, which led to an inside bar and then a little bit of a pop. So I just kind of look at the patterns. Look, here's another one here. I look at the patterns in the past, try to see how they did. I know I have a 50-50 shot, sometimes a little bit better. But I know that I'm going to make sure that I do the risk management part. That's the part of the game that's going to make me money in the long run. So would you kind of pass on this one then, if since you don't really see that consolidation you're looking for?
No, I think that this is actually a good setup. I mean, you've got your bullish engulfing, which is your Nirvana pattern, correct?
Yeah.
And I also noticed just below those candles is a gap, right?
Yeah, right here.
So price fell down to that level and bounced just above. And I know that everyone talks about, gaps need to be filled, yada, yada, yada. And there is a lot of truth to that. Most gaps do get filled, but sometimes they don't. And honestly, what can be a really powerful move is when price does exactly what you're seeing right here, where it pulls down to the gap and then bounces just above. That can be a very bullish indicator. So you had a nice big pop. They sold it back off. It bounced right above the gap, and now it's starting to turn back up higher. So I think this could be a pretty nice bullish setup. And yeah, right where your mouse just was, you even have another little gap up there.
Right here.
Which I think would be a lot easier for price to fill than the one below.
And this one down here.
Yeah, exactly.
I totally agree. And we have the pattern setting up here, which, all this is saying is that we're trapping a lot of traders. We try to break below and we try to break above, and we don't know where we're going to go. And usually after that, we usually have some kind of conclusion. But yeah, just to add to that with the gaps, I've seen that a lot. You don't have to fill the gap. One thing that I like to do is I like to take a fib and put it on the gap. So in this case here, I've taken that high of this last bar, bringing it up to the recent high and just measuring this gap down. A lot of the times you'll see it'll tag some fibs because there are algos that are actually buying in the gap with a stop loss below the resistance of the previous resistance. So, you know, a trade setup could be, you know, getting in on the gap fill somewhere around here, let's say, and putting your stop below this price consolidation that was there in the past. So yeah, so great insights. And I love gaps. And I think there's something that are a little bit underrated these days.
Yes, that's true.
All right, let's see what else we got. Walmart. So obviously, guys, we're not going to get to everything, but we're going to do our best. So I guess, do you start off with this particular time frame, like weeklies, monthlies, or dailies when you're looking at your analysis?
Well, on the weekends, I always look at the weekly candles
Okay.
because that gives me like a broad idea of kind of what's going on. And then I'll drill down into the daily and then, you know, the 30-minute, 15-minute. But yeah, I will always start with the longer, bigger time frames first.
Got it. So why don't you walk me through how you would look at Walmart here? So for me personally, I'm on the weekly, I don't see a pattern. I'm on the daily, I don't see a pattern. I'm on the monthly, I don't see a pattern. So I just move on. But I guess how would you go about looking at this one?
Yeah, I mean, the obvious answer is that this is a falling knife, you know, and the
Yes.
thing that they always say is that you don't want to grab falling knives because you'll get cut. So, you know, in this situation, I would look for price to stabilize before I would consider a long entry. And that may be, you know, moving down to a support level. This probably isn't an ideal short candidate in my mind, just because it is getting somewhat extended to the downside.
We have a whole bunch of weeks down there. Boom, boom,
Yeah.
boom.
So the time to get short was, you know, 3, 4, 5 days ago when it was trading, you know, 142 or so. So at this point, you know, I see this chart. It's obviously breaking down. I would just personally just wait until there is a better setup in my mind.
Beautiful. So, you know, just so you're looking for those consolidations, the support and resistance, those clean breaks, getting in there, taking your money to the next level, maybe the next support level if you're shorting, the next resistance level if you're going long, and taking those high probable trades. Do you ever leave runners on, or are you usually in and out of the full position?
Oh yeah, for sure. I mean, it depends on how big my position will be. But yeah, I will definitely leave runners. Nothing substantial, but you know, I'll leave runners if I think that there's going to, you know, be a possibility of a more extension of a move.
Got it. So let's move on to actually SPY. That's an interesting one. So do you add SPY to your, you know, your normal analysis every single week? Like, do you look for the confirmation? Okay, the market is bullish, and then my setup is bullish. So, you know, maybe I have an extra confluence. Is that something you also add to your analysis?
1,000%, yes.
Beautiful.
So
beautiful.
I have a lot of monitors, but there is always a SPY chart and a QQQ chart up on those monitors at all times of the day. I'm always watching what the market is doing, because you could have a great bullish setup and the market rolls over and it's ruined, you know? So
Yes.
I always want to make sure that the indices are moving in the same direction as my, you know, thinking that the particular stock that I'm trying to trade is going to move in. So yeah, watching the S&P and the NASDAQ are key in my mind.
Got it. So let's wrap up before you go, because I know we're at 57 minutes. So why don't you talk to us? Give us your rundown on SPY. What are you seeing? I'm here on the weekly. What are you expecting? Or are you kind of just sitting on your hands until you get a more, you know, I guess, resolution of this market that we've been having for the last few weeks?
So in my mind, the big moving average that everyone was watching was the 50-day. Once we lost that, you know, price really started to pick up steam to the downside. If you want to flip to the daily, you can see it pretty easily. And we actually bounced back up to that level and were denied, so we could not get back above it, and then immediately sold back off. So that's a pretty bearish indicator. The market bounced. Yeah, exactly. The market bounced on Friday. It tried to take out that low, but you know, it was, you know, a false breakout, just like we were, or breakdown, just like we were talking about earlier, and it moved back higher. You know, is the bottom in? I have no idea. Could that have just been a reaction from the market having sold off too much in the near term? Absolutely. I think that, you know, you will always want to react to price and not try and guess. I don't know if the market's going to go higher or lower here. I think that, you know, you have to take each day, you know, as it comes. But, you know, the fact that, you know, it did try and push below that low around, what is it, like 429 basically, and then bounced back up and closed actually above where it opened, that could be a bullish indicator. Maybe we get a bounce into this week, which would be great.
Yes.
So I think that it would have been a lot worse if we closed below that level. That's for sure.
Beautiful. And I'm looking here at the monthly, and I just saw, the first outside bar since September of 2020. And usually with these outside bars, you have pretty decent follow through in whichever direction it breaks generally. So I'm thinking right here, we have this big range bar. I think it's going to take some time to resolve this bar and either break down or break back up. Definitely, if we break back up, I would say that would be extremely bullish, because I know a lot of shorts, this is what they were waiting for. So if we somehow gap up on Monday and start ripping, this is probably going to be a very bullish sign. But we'll have to wait and see, as always. And I always like looking at the monthly just to see, and usually those outside bars. And here's your 50 on the monthly too. We have a lot of room back down to these support levels. We have the 20 right here, and then the 50 down here. So that's kind of what I'm looking at. But yeah, I definitely agree that false breakdown, those are usually the most dangerous, especially on Fridays. It seems like that happens all the time. But because there's people that are chasing new lows, and when they get turned around on, it could be very vicious. But definitely we still have to get back and reclaim and break that 50 in order for us to say that we're safe technically, and get back into the bullish breakout that could happen.
Yeah, absolutely. And I mean, we're coming up towards the end of the year. We're in the fourth quarter now, and Santa Claus rally is definitely a real thing.
Yep.
Generally, the first half of October can be bearish just based on the seasonality. But after we get through that, people will start to try and front run the Santa Claus rally. So they'll start buying in anticipation of price moving higher. And that can actually be what propels the rally. So we'll see. I remember a few years back when the market got annihilated, and we sold off hard. So it's never a guarantee. But as far as seasonality does go, November and December are generally bullish. But like you were just pointing out with that bearish monthly engulfing candle, man, that's a nasty looking candle. There is definitely room to the downside if it does want to continue lower. And it is, somewhat extended. So that wouldn't be a crazy thing either. And if that does happen, us as traders, we just got to capitalize on the downside. We got to hedge our positions if we're long stock, in our portfolios. The market pulls back. There's nothing you can do to prevent it. So to try and make money off of it, I think is the wisest decision.
Yes, and man, my mind is blown. I know everybody's here, mind is blown, and but we want to be very aware of your time, brother. We know you have to get out there and get some content out for your members. So I want to thank you from the bottom of my heart, from the community, for everything that you've done. You've really actually given us a very simple way to trade. Trigger method is nothing complicated, and it's very relatable to a lot of people. And the tips you shared with us today were absolutely impressive and immaculate. And it's like Hulk Hogan stepping into the wrestling ring today, brother. So I appreciate you so much. And everybody, let's hit Theta with a 10 on the way out. And thank you so much. And guys, you know where to find him right here, ThetaWarrior Pro. Check him out. Buy a computer, man. Take a picture and show it to me. And support this guy. He's one of the gems that we have in the community that we need to make sure we keep him here, guys. All right. So thank you so much, Theta. And have a great evening, brother.
Thank you, Rich. I really do appreciate it. And thank you, everyone that tuned in and commented and spent the last hour with us. This was a lot of fun. And let's definitely do this again sometime.
Yes, sir. We will. All right, man.
Good luck this week.
Thank you. Thank you. Take care, brother.
Take care, guys.
Boom. There we go, guys. ThetaWarrior in the house, man. Dropping bombs, dropping knowledge. Man, I learned a lot. I hope you guys did too. We definitely got to do a part 2. I know Sarah is in the house as well. Thank you, Sarah, for being here. Thank you, everybody, for being here, man. This is actually mind-blowing for me because for the first time, we've passed 500 people live. And I'm kind of like shaking right now because I never thought that I would ever do that in my life, guys. Last year, I started a YouTube channel. I used to have 5 people, sometimes 0 people show up, but I just kept doing it. Now, 230 videos later, I feel like I've hit it, guys. I'm so thankful. Thank you so much, guys. I really appreciate you guys. And what we're going to do is we're going to do what we always do. We are going to do some giveaways to you guys for supporting me. All right, so that's what we're gonna do. We're gonna do some giveaways today, but let me continue along with the chart requests. Let me bang out a few more of those, and then what else did I have on the agenda? The spy room, swings, and the giveaway. Okay, so let's go ahead. Why don't I take a few from the chat? So go ahead, guys, throw some chart requests in the chat. And I will go ahead and show you, my thoughts. And yeah, this moving average is 51, guys. Very powerful. Definitely very powerful. I just don't trade with it right now because I find it sometimes a little bit hard to pinpoint it. But definitely very powerful tool. All right, so I'm just gonna throw that off right here. Let's go. So let us look at MU. So MU is one of the MU is one of the stocks that I am trading this week. So we just look at this weekly chart, guys. It's just been crazy. We've had outside bars, inside bars, outside bars. We've had just a lot of consolidation. We had earnings already. So earnings has passed. And now we're finishing the week with another outside bar. So I'm looking for the break of this outside bar to be a resolution to some of this consolidation. And I'm looking to get in and out. Take some options here. That's one that I'm using in the room with everyone as well. So definitely love MU. I think it's a very important pick to watch going into next week. Let's go on to Netflix. So as you guys know, the last time I bought Netflix was down here with this Holy Grail. And that's pretty much it. I did not get back in. I probably should have got back in on that outside bar, but I was just satisfied with the money that I made, and I didn't want to take any more chances buying at highs. But guys, look at the bars. The bars don't lie, very clean right there, that outside bar in the weekly. Right now here with this bar, if I go down to the daily, I don't really see anything that I am looking to trade. The monthly is still developing here. It's very early in the month, but I won't be chasing anything at highs, that's for sure, especially with this market. So I see a lot of Tesla. Let's look at that. I think there was some Tesla-related news this weekend, but I did talk about Tesla already. So Tesla was a Fibonacci look that I had here. We had this leg back down from the lows. Boom. Yeah, Sarah, thanks for joining. Damn son, you're going to be here all night long. I'm out. Enjoy the show. Boom. I'm going to be out real soon. So thank you. Thank you for being here. You are much appreciated. And I hope you have a great week. I hope you have a positive week. I hope we all have a positive week. So thank you so much. So right off here, guys, we had that pivot low. We pushed back up. We traded to the 50, and the 50 extension completed right here at the 0.618. So you can see that the bulls and the algos who already bought that first level have been paid. And now we're coming up into this area where it's either we're going to squeeze through and break all-time highs, or we're going to come over here and we're going to flip back over, because we do have some shorts that we'll be trying here, because this is also a Fibonacci short. If I take it from the high to the low like this, you see it right here. We're lined up against some Fibonacci's to the short side as well. Right here is a 618. So Tesla is in a very important zone. I don't think the shorts are going to go down without a fight. I do think there's going to be some pressure, but if we start squeezing through these highs, I think we have a good shot of breaking the all-time highs. All right, Amazon. So here was my last trade on Amazon. I haven't really traded it since. This is the one where I made, good bit of money. So if I look here on Amazon right now, weekly, monthly, nothing for me. Weekly, nothing. Daily, nothing. What I do see on the weekly is this Fib setup that I had drawn out here. So we actually had this perfect test of the 786 right here. We had that low, and then we had this high. We came back down and touched it perfectly. And that's where the algorithm was sitting. Bam. And it bought. The question is how strong is that algorithm going to be? I don't know. So we'll have to see how the price action is on Monday. This might be a chance here to try to see if we can get a next leg up with a stop down here. But let's see how Monday closes to further assess. Roku. So Roku on the weekly, nothing there for me. Daily, double inside bar, very powerful. So I know a lot of you guys have been talking about this one. Yeah, I love it. It's also kind of lining up, with some previous supports back in the day. If we draw this line right here, let's draw this line right here. Boom. Okay. So I want to make this blue. So you can see from here, pretty much up to here, right? So this whole area has been supported in the past. And now we have the pattern to support us. We have the pattern, the double inside bar pattern right here to support us, which is ready to rock and roll. So we can just take the plays, we can drill down at the open, and we can look for an entry. So that's a very, very good one. Thank you so much for sharing. Okay. So what we're going to do here now, guys, is let me get into the giveaways because we're already over an hour. And I know you guys, I know it's Sunday. So I know you guys have to get going. So let me go ahead and pull up the sign up for the giveaway. Just give me 1 second. Where are you? Okay, 1 sec. Gotta go into this. Check it out. And yeah, guys, man, I really I love this stream today, man. And I think it's gonna be one that you're gonna have to rewatch. Also, there were so many gems that were dropped there. Sometimes you're gonna have to listen to it a few times to really get it. So here we go. So this is the wrong one. So I'm gonna give you guys. Actually, I'm gonna give you guys a time to sign up if you didn't. Right here is the giveaway sign up. I think we have like 1,700 people signed up. Let me post it in the stream right here. So if you didn't get to sign up real quick right there, okay? And then I'm gonna pull this. Giveaway sign up here, responses. Okay. Oops. You guys didn't see that. All right. So we are at a total of 1,862 signups. And what I'm going to do here is I'm going to go ahead and pick a number, random number right here. We're going to do a random generator right here. Random number generator. Right? So hit me with a drum roll. And we're going to pick a winner right here. Hit me with a drum roll. Let me see the drum rolls coming in. All right, here we go. We're going for it. Number 954. So let's see who that is. 954. So what I'm going to do is I will email you a copy of the book. I'm going to announce it right here. I'm not going to say your full name because just to protect your identity in case you want to. So the winner is Jeremiah R. And his comment is giving me knowledge and confidence. All right, brother, welcome, man. So there you go. You won my most recent book, the Options Drill Down book, brother. And I'm going to be sending to you right after the stream. And you're 1 month free in the room. All right, boom. All right, let's do another one. Let's do it. So hit me with a 7 if you're ready to rock and roll. Hit me with a 7 real quick. Guys, I do these giveaways every week. Okay? So don't worry. You can get a chance next week. I always give back to the community, man. I always give back. That's something that I promise you guys I'll always do. So let's hit it again. 1457. Okay, let's see who we got here. 1457. All right, the winner is Philip T. I have doubled my small account since following your methods. Boom. All right. So thank you very much, my brother. So we got Philip there and our other brother here, both winners. There we go, guys. So thank you so much, guys. That was it. We did 2, and I think it was a good stream. I really enjoyed it. I did some more charts over the last 2 videos, some more swings and stuff like that, and so you guys can check those out for the other videos. So the only other thing I want to say before I leave is some changes that I made. Guys, I want to discuss them a little bit. So you know how we've been together for a while, and many have been asking me about the spy room, and you guys wanted it, so I made it happen. I think I made it very affordable, guys. I could have charged whatever I want. I'm charging $39 a month for the spy room. Just launched it this weekend. I think we got a good amount of people already just signed up. So what's it going to come with is daily spy trading plan with my suggested entry stops and targets, the fractal bot alerts, so the inside bars, the double insides, the Holy Grails and Nirvanas. The bot is going to alert when those show up on the 5 and the 15-minute chart. And then I also have weekly SPY swing trading plans, guys. So yeah, there we go. That's there. And I also have all the trades ready for next week for the stock swing room. They're ready to rock and roll. Okay, so I think I have about 8 swing trades for that. Then we have SPY. I'm trying my best to do as much as I can for the community. And you guys, I didn't really want to do a SPY room. I'm going to be honest. I didn't want to. Like, I was happy with where I am. The main reason that I did it, guys, is because I got DMs from a few followers and, close friends. And there's been a lot of people on Twitter that have been copying and pasting my stuff and, trying to say like it's theirs. And I know it's not theirs because the levels that I use are they're very specific to what I do. And I haven't really discussed that before. So that's why I said, all right, if people want to copy me and stuff, I'm just going to try to do as much private as I can. That way it'll be for the members. And that way they can't go and then take my stuff and then charge other people for it. Like what is the point of that? Right. And some people have told me that there's people that they're asking questions, like they're asking questions about certain things, and those people can't answer those questions that they're asking. So, you guys know who's real and who's not out here. All right. Pretty much, guys, yeah, that's it. That's all I want to talk about. By any means, guys, I'm not saying you have to join anything. I don't need you guys to join anything. My setups, I post free daily picks. I have free videos on YouTube. You can look at that, guys. It's just for those who want to accelerate their learning curve and see what I do, because everything that I post, guys, I do them myself. It's not always going to be a winner. It's, guys, like I said, I aim to be at least above 35% win rate. That's what I try to do, guys. So as long as I'm above that, I'm happy. But there's definitely other ways to make money in this game, guys. All right. But anyways, guys, thank you so much for your time, man. I hope you learned a lot. Theta was in the building today. We broke the internet, I think. All right. But anyways, guys, thank you so much. Appreciate you guys. Have a great evening.